Afternoon, everyone. On behalf of the Committee on Financial Markets and Investors Protection, I welcome you all to this webinar on advancing corporate governance in listed entities, emerging trends and best practices. We have with us as speakers, we have CA Amarjeet Chopra, sir, who is the past president of ICI. We also have CA Sushil Agarwal, sir. To address them, we have our chairman, Durgesh Kabra sir and Dayanavas sir, and CA Sunil Goyal sir, who will be moderating the session with us for us today. So I welcome all of you to the webinar and would like to just briefly introduce our vice chairman and chairman to you. So the vice chairman of the committee is CA Dayanavas Sharma sir. He is the managing partner of Lakshmi Niwas and Company Chartered Accountants. He is a CCM of the ICI and a leading advocate for technology integration in the accounting professional. He chairs the Digital Accounting and Assurance Board and serves as the vice chairman of Committee on Financial Markets. I welcome you to the webinar, sir, and would like to hear from you now.
Thank you very much, Sangini, and good afternoon to all. Indeed, a pleasure to have you all here. And undoubtedly, indeed, a pleasure to have the past President Amarjeet Chopra, sir, who has been continuously talking on the governance side on multiple forums. And he has been a great support in the entire ecosystem and coordinating on behalf of the institute, sir. Thank you very much for being the brand ambassador at all the regulatory bodies and the functionary and the advisory function which you give. I think which comes in a balanced approach from the corporate as well as the accounting profession as such. So welcome to you, sir. Sushilji, namaskar. Thank you very much. Both the Sushilji, namaskar. Thank you very much for joining us today in this interesting webinar. And undoubtedly, my chairman, Durgesh Kabraji, thank you very much for being here. Indeed, a pleasure to have you all on this interesting topic with regards to the governance side. Today, the most important point is the question is when you talk about governance, governance is given birth from a word called ethics. And if we are able to define the taste of water, we are able to define the taste of ethics also. And when you talk about governance structure as such, it plays a very important role in the entire ecosystem. And today, whatever is been happening around is actually seen from the perspective of not only the management or the promoters, but also from the independent directors' point of view. And this entire set of promoters, management, independent directors, and then the auditors who are playing a different role gives that comfort to the society with regards to the governance structure as such. And this is a right forum today to listen from the eminent speakers on this particular side of governance and the importance which is actually getting created. It is not restricting alone at a listed entity level, but also it is going to a private equity, venture capital funds. Even today, it is going highly talked about in the government circle also. It may be a government organization, but it is very important to note that even in the government organizations, governance is being talked at the peak. So, friends, today let us all welcome this great and eminent speakers who have seen the ups and downs of the entire financial ecosystem, and they know the right and wrongs which have happened across the board. And Chopra sir, one thing which I would like to share is primarily that along with Durgesh ji, we are actually doing one beautiful report, which is a high-powered report, which is going to come along with other regulators on the governance side. It is governance is one small part of it, but we are talking about the corporate frauds which are been happening and that has been reporting, and whose responsibility and at what stage the responsibility is been very clearly defined in this document, which is going to be released shortly. So I'll not talk much about it. I'll leave it to my chairman to take the discussion forward. But yes, keen on welcoming you all for this interesting webinar, and look forward to listening from all you people. Thank you all. Thank you, Sangini. Over to you.
Thank you, sir. I would now invite the chairman of the committee, CA Durgesh Kumar Kabra, sir, to give a few words regarding the webinar and on the topic. So over to you, sir, now.
Thank you, Sanjini. Respected past president of the institute, CA Amarjit Chopra ji, the other panelist, CA Sushil Agarwal ji, who is the executive director and group CFO of Aditya Birla Group, and is director at Aditya Birla Management Corporations. The moderator of this particular webinar, CS Sunil Goyal, who is the founder of Letter Up Group and also past chairman of the Western India Regional Council. And corporate governance is the main thing for all listed entities. I would say not only for listed entity, for all other entities where the public is interested. And that is where the things can improve, the better results can be there, and growth of the economy will lead when there is a better corporate governance. The Committee for Financial Market and Investor Protections are doing a lot of activities, but this is one activity where we are also focusing that at least 2 to 3 webinars we do. We call the authorities on the subjects who talks about this. Today, we have these two people who are having wide experience on these subjects. Chopra sir is not only being the past president of the institute, but he's as the independent director on various company, and Sushilji's experience is tremendous as far as the corporate is concerned because he is associated with the Aditya Birla Group. So, coming back to the session again, what I believe is corporate governance today goes far beyond the regulatory compliance. It represents trust, transparency, and ethical leadership in a rapidly evolving environment marked by the technological changes, globalizations, and rising investors' expectations. Strong governance has become the foundation of the sustainable growth. Through today's sessions, we aim to explore emerging trends, regulatory development, and practical best practices that can help listed entities to strengthen their governance framework. One is as independent director, what he is playing, what kind of role he is playing. The other fellow who is part of the main management team, he will tell that how the corporate governance can be at the best. And when these are being taken care, the board effectiveness will automatically come. The ESG disclosure, which is need of today, will also mitigate the risk of the management. And not only this, the digital environment and governance is also equally important. Now, I'm sure, friends, this is the time for chartered accountants that if we do not change, whether we are into practice or into the service, and we do not promote the corporate governance in the corporate world, I think this is going to be tough time for all of us. So, to maintain the pace with the technological changes, with the ESG changes, with the globalization, with the digital changes which is happening globally and even in India. I think here is the role of chartered accountant where we can do wonders provided we maintain transparency, integrity, and excellence into our work with the independence. I'm sure that would enable us to have the better presentation as well as performance from our side. I once again extend very warm welcome to Amarjit Chopra ji, Sushil ji, and Sunil Goyal ji, and I extend warm welcome to all the participants also. And I am sure that yes, today's uh, session will ultimately help our chartered accountant fraternity who really wish to take it forward into their corporate organizations where the best of the corporate governance can be done in their organization or wherever they are consultant, what kind of things or what best practices can be taken care of, which help them to perform in a much better way. And as far as Dayanivas Sharma, Vice Chairman, has told about the research report which we are going to publish, where the high-powered group has been created, where all the stakeholders, may it be NSE, BSE, or the SEBI, they all are having participation into it with the best of the specialist into those area who can control the frauds, who are having the investigating minds. We are coming out with research report very soon, where we will be in a position to guide that yes, at which stage the fraud can be detected and how it can be controlled and whose role is what chartered accountant should do, what promoters should do, what other stakeholders should take care as, and how one can come to know about this and how it can be reduced and in time to come, that there are no frauds in time to come or early detection of fraud, which helps the corporate at large. So this is what we are doing, and there are beside this many other things which has been started by this committee. More specifically, two things I want to tell you this time to all the participants. I know the panelist knows about all this, but two things which we have started this time is certificate course on NBFC, which again help all the professional brothers, because now we know that NBFC audits are being also done on the basis of the rotation of the auditors, and that too in 3 years. So more number of auditors are involved into it, and there was no publication available, no certificate course was available earlier. We have started this year, as well as one course on investment banking also we have started, where beyond assurance and audit, there can be the more opportunities for chartered accountants into the area of the capital market. With this, I once again welcome you all, and over to Sangini.
Thank you so much, sir. Now, I would like to move on to introducing our special speakers for today. So we have the past president of ICIA, CA Dr. Amarjeet Chopra, sir, as a speaker, and accompanying him would be CA Sushil Agarwal, sir. So I would like to introduce Amarjeet Chopra, sir, first. Amarjeet, sir, is the past president of ICIA. He's a distinguished chartered accountant with over 48 years of professional experience. A senior partner at GSE and Associates LLP, New Delhi. He's also a PhD scholar on NPA management in banks, a comparison of public and private sector banks in India. He served as vice president of ICIA as well from 2009 to 10, having earlier chaired key committees such as the Accounting Standards Board, Auditing and Assurance Standards Board, Financial Reporting Review Board, and Executive Committee. He is also the chairman of the NACAS, during which Ind AS aligned with IFRS were introduced in India. He has also held several government and regulatory positions, including the board member of Bank of Baroda, Indian Bank, IRDA, and Tata Power Group companies. He is currently serving as the part-time member of NFRA and a member of the Standing Committee on Corporate Laws. A prolific speaker and writer, he has delivered over 3,000 lectures in India and abroad, contributed to professional publications, and co-authored a book on Indian accounting standards. He has been honored with honorary memberships from the Australian Institute of Chartered Accountants and International Association of Accountants, London. I welcome you to the webinar, sir, and we are really happy that you took out time to be a part of this session. I would now like to move on to the introduction of the second speaker, who is CS Sushil Agarwal, sir. Sushil Agarwal, sir, is the Group CFO and Director of the Aditya Birla Management Corporation, which is the Group's apex management body. He has been with the group for over 36 years and has the unique distinction of working closely with the former chairman, late Mr. Aditya Vikram Birla, and the current chairman, Mr. Kumar Mangalam Birla. He serves as a director of the board of several group companies, including the Hindelco, Grasim, Vodafone India, Aditya Birla Capital, and Novotel Jewels Limited. He is also a member of the Business Review Council of the group. He has led various strategic initiatives of the group, including M&A and restructurings. He is a strong advocate of corporate governance and trusteeship and is widely acknowledged for his financial acumen and analytical skills. He's been recognized as one of the top 10 global CFOs in 2023 by CEO Insights magazine. In 2018, he was awarded as India's greatest CFO at Asia One India's Greatest Brands and Leaders Awards and as the Business Leader Corporate CFO at the 11th ICI Awards. He's a qualified chartered accountant and holds a master's degree in commerce. I welcome you to the webinar, sir, and I would now like to pass this on to the moderator, CS Sunil Goyal, sir, who will take it over from here. So over to you, sir. Thank you so much.
Thank you, Sangeeni. Thank you, Durgeshi. Thank you, Dayanivasi. Thank you, ICI, for this opportunity of moderating a very important session today. And I'm extremely happy and delighted to be here amidst the very stalwarts of the profession. A very good evening to all. It's my privilege to moderate this important discussion organized by ICI on the subject that defines the credibility of our markets and institutions, corporate governance in listed companies, and its emerging trends. In today's context, governance is not just about compliance or quarterly checklists, it's about culture, conscience, and transparency. The boardroom today expected to lead with accountability, foresight, and values that are at the heart of the ICI as well as the Indian corporate transformation system. As they say in Sanskrit, dharmo rakshati rakshate. Dharma protects those who uphold it. Just as dharma sustains society, good governance sustains corporate longevity. And I'm extremely happy that today we have this panel discussion along with two very stalwarts of this profession. Both are CS, Dr. Amarjit Chopra, past president ICI and highly respected independent director. He brings the regulators and professionals' perspective, how governance frameworks are shaped, strengthened, and implemented across companies. As well as we have Sushil Agarwal, the Group CFO of Aditya Birla Group, a veteran finance leader who has seen governance evolve in one of India's most respected conglomerates. He brings the corporate practitioner's lens, how governance works in large, complex, listed enterprises. And before we start with the questions, I would request each of the panel speakers to give their initial thoughts. I request Dr. Amarjit Chopra to kindly begin the session with your opening thoughts, and that to be followed by Sushil Agarwal ji. Amarjit ji.
Thank you, Sunil, and of course, thanks to Durgesh Kabra ji and Dayanivasi Sharma ji, the chairman and vice chairman of the Committee on Financial Markets and Investor Protection of the ICI. And of course, thanks to Sangeeni also for the invite. And greetings to my fellow panel speaker, Mr. Sushil Agarwal. You see, so far as this word governance is concerned, whenever we talk of governance, we can't talk of bad governance. We have to talk of good governance only. What can lead to good governance? But unfortunately, in the recent times, whatever we have come across have been more examples of the bad governance or misgovernance rather than the good governance. That is one reason that all the regulators today, you talk of Reserve Bank of India, you talk of SEBI, you talk of NAFRA, you talk of ICI, you talk of anyone else for that matter. They are all trying to, I would say, rather than creating the atmosphere for ease of doing business, the businesses are getting strangulated more and more. We have been having knee-jerk reactions to every scam that happens. We modified, rather we came up with the new law in the Companies Act in 2013, which was a knee-jerk reaction to Satyam scam. And because this was an act which was enacted as a consequence of the knee-jerk reaction to Satyam, you have seen the number of changes which have taken place in this particular act in the recent times. Because the government realized that probably you cannot have an act, you cannot have the provisions of a particular act based upon one scam, based upon one instance. You need to have an act based upon the general conditions. You don't treat everyone as a culprit, basically. You don't treat everyone as a chore. So, and everyone is not an unscrupulous person from that angle. And that is why we had to have the decriminalization of various provisions under the Companies Act recently. But then at the same time, if you really ask me today, last 10 years, if you look at it, the kind of write-offs which have taken place in the banking sector and the kind of NPAs that the banking sector has gone through, some of the banks has a high NPAs as 23% also. That reflected poorly on the governance of those companies, that reflected poorly on the governance of the banks for that particular matter. And as a consequence of that, Reserve Bank of India came up with some of the regulations to see that there is a better governance. And then SEBI has come up with a number of regulations basically to improve the governance in the companies. Long time back, we came up with the concept of the independent directors to improve the governance in the companies. But whether that concept has succeeded or not succeeded, I will leave it to the judgment of everyone. Because whether we can call an independent director as independent, I think that's also $1 million question. There are certain bureaucrats, there are certain bankers. After retirement, they have become directors in some of the companies and their earnings could be in the range of 6 crore to 9 crore rupees today annually, arising out of these independent directorships. Now, whether this kind of a remuneration can create independence or it will not create independence, I think it's $1 million question which needs to be seen. One can say that it's a value for the time that they spend in the companies. But then it was the value for the time that they were spending in the respective organizations before retirement. And probably in some of the cases, they handled the files of those companies also, very frankly, if you ask me. Now, how do you expect the governance to improve in those circumstances? I think to me, that's again $1 million question. Of late, what is happening in the various boards is, and I think that's a very welcome sign, the diversity of the board is being taken care of, because that brings the, that reduces the bias, gender bias. And now we can see some very good ladies coming to the various boards and contributing very effectively in the governance of those boards. Recently, the independent directors have been held liable. Recently, in one of the cases, even MC has held the independent directors liable for certain information which was supposed to be filed but which was not filed with the MCA. Now, one can say that you are creating undue pressure on the independent directors, and it's also a matter of fact that probably the kind of functions that the SEBI and the other regulators expect from the independent directors who go there only to attend the meetings, but they are not whole-time directors there in any case. And they can only raise the issue, they can seek the information, and any independent director can be as effective as the management would allow him to be by providing him the information. And if the information is not provided and there is no clue in the agenda items, how the governance can improve in those circumstances. I think that's again $1 million question. But then, to me, the most important point in the governance is that the independent director who gets appointed must know how to read the financial statements, whether he understands that particular business or he does not understand that particular business. Now, if I don't understand IT, why should I like to be the chairman of the IT committee of that particular company? I don't think that should happen. If I don't understand the risks of a particular business, why should I be on the risk management committee of that particular company? Then let someone who really understands the risks of a particular company should chair that particular committee. And then only the governance can improve, because he is the person who can raise those effective questions with regard to governance of those companies, with regard to the risk in that company. And if he is able to identify the risk, he is able to assess the risk, he will be able to provide better mitigational measures with regard to those risks also. Similarly, in the audit committee, the person who chairs it, the person who attends that, I will not say that every person in the audit committee has to be a chartered accountant or has to be one who understands the accounting standards or the auditing standards. But I am very sure, and it is happening now, that unless you understand Ind AS, you understand accounting standard, you understand auditing standard, you understand going concern for that particular matter, how you can improve the governance? If you don't understand even the economics, the world economics, the global conditions, you cannot be effective as an audit committee chairman. I will just give one example, Sushalji and Sunil. What has happened in the recent times is the statements of Mr. Trump with regard to the tariff imposition. Now, if those tariffs are imposed, and which have already been imposed, I think this really puts some risks to some of the businesses in India. And if some of the smaller companies which were relying only on the exports to US may not be going concern tomorrow, and probably someone has to assess whether those companies remain going concern or don't remain going concern. And some of the bankers will have to assess what is going to be the impact of those tariffs on the various companies to which they have given the loans, for that matter. The inventory valuation is going to be hit as a consequence of that in some of the cases, for that matter. Now, what is important to be understood is that I should be able to understand the global condition, I should be able to understand the auditing, accounting, and of course, macro level position in the country and in the globe. The other thing that one would like to say is that of late, there's a lot of integration of IT into the various systems. And a person should be able to understand the impact of that on the governance, on the purchase, on the sales, on the manufacture, on the generation of the scrap, everything for that matter. If you are unable to understand the implications of the AI, particularly the artificial intelligence, which will come in to determine so many things now, even in some of the decision making that may become relevant in the times to come. I think that is what is very important. Integration of AI into the entire governance system. Now, it is going to be embedded in the times to come. There is absolutely no doubt in my mind that it is going to happen. And that may be becoming one of the very important factors so far as the governance part is concerned. And one of the very important parts of governance in the present situation in India is wherever these are family-oriented businesses, family-owned businesses, I think succession planning in every company is very important from the governance perspective. Of late, SEBI has been very, very vocal about the related party transaction, and I must say very, very rightly so. They have come up with one of these industry standards with regard to the related parties, which is effective, I think, from 1st of October, if I'm not mistaken. Now, that needs to be understood by each one of us as to what is going to be the implications of this. If we look at the various startups which were there, where I think 90% of the startups have a very high mortality rate. Now, we need to all understand that, being on the board of such startups, as to what is happening and why it is happening, whether it is due to the shortage of funds, or it is because of the misuse of the funds, or it is because of the marketing, or anything else. unless as board member I am able to identify that, unless as a board member I am able to appreciate those problems, I think the governance levels cannot improve. I am sure that in the times to come, the emphasis is going to be more and more on the ESG, also environmental, social, sustainability governance for that matter. I think this is again one of the areas which has come into play. Very difficult to be understood and very difficult to be implemented, but it is going to become an integral part of my total governance in the times to come. And I think the SEBI realizes it, and SEBI is laying down certain norms with regard to that, whether you call it BRSR report or anything else. And auditors and internal auditors will have a very, very important and onerous task to play so far as improving the governance is concerned. I think rest of the things we can discuss when we come to the panel discussion stage. Thank you very much, Sunilji, for giving this time.
Thank you, sir. Thank you, Amarjit, for your very lucid analysis of the current scenario. And we'll come back to you with more questions and understanding on that. May I request you, Sushilji, kindly throw your initial lights on the subject.
Thanks, Sunil, and thanks, Amarjit ji. I think I want to also thank ICA for taking these topics, which is so relevant. And I think having experience of Amarjit ji as an independent director, I'll give you some perspective of what I have seen in corporates. And I also want to kind of thank Durgesh and Vice Chairman of the committee. Good afternoon to everyone. It's my pleasure to be among so many of fellow finance professionals, people who live with governance, not as a theory, but as a daily reality in my mind. If there's one thing we can all agree on, it is that governance today has become a full-time profession in itself, as he was earlier explaining, with audit committee, quarterly certificates, and endless disclosures. Sometimes it feels like the compliance has its own calendar, and we are all just keeping up with it. Jokes apart, I genuinely believe that behind all the paperwork and processes, the real essence of governance hasn't changed. It's still come down to intent, integrity, and accountability. True governance is doing the right thing in the right way, even when nobody is watching. I think to me, that's really, really important. I'll repeat, doing the right thing in the right way, even when nobody is watching. In a setup like Aditya Birla Group, which is spread across 40 odd countries, rather 41 countries today, and have 200 plus plants, governance can't be just a quarterly event. A small incident in one corner of the world can now go viral before our next board meeting starts. So governance has had to be moved from periodic oversight to real-time vigilance. We need to track these things daily. Technology has improved transparency, but is also increased scrutiny. That's the world we live in today. Now, to be honest, all of us feel that weight of compliance. And Amarjit ji talked about this in a little more detail, and possibly we'll do more in question answer session. But all of us feel that way of compliance, the sheer volume of board documents and the quarterly ritual of submissions is really, really painful. It's sometimes repetitive and quite exhausting. But I have also realized this: once the discipline of governance becomes part of your culture, all of this starts to feel different. Yes, it is still a lot of paperwork, but after a point, you are not doing it to satisfy a regulation. You are doing it to reflect what you already practice. In the CFO context, the CFO's role, in my mind, has expanded. A role has evolved dramatically. We are no longer controller. We are custodian of credibility. Credibility is most important thing today. There was a time when finance ended with numbers. Today, it begins with narrative. explaining, engaging, and building confidence with investor, regulators, and employees as well. Governance actually, in our mind, through culture, not by control, because sometimes when the regulation put lots of control, I don't know how much it really helps, but it has to be a culture. In our group, we have learned that governance framework best when anchored in a strong value system. Every new acquisition, every business, every country begins with a cultural integration before a financial one. So clearly, I think culture in our mind is very, very important. When people share a common instinct for doing what is right, governance does not need to be enforced. It happens naturally. And once it is in your culture, the policies manual seems lighter. How do we adapt this governance across sector? Because in our group, we have multiple manufacturing facilities. We are in many services businesses. So when we moved from manufacturing into services, not really moved in the sense that we were predominantly manufacturing organization earlier. Over last 2-3 decades, we have got into, say, telecom, financial services, retail, many businesses which is facing consumers. Our entire governance system or governance dictionary had to be changed. We moved from safety audit to data audits, from factory to inspector to financial regulator. But what stayed constant was the spirit of fairness and transparency. Whether it is a cement plant in Madhya Pradesh or a financial services business in Mumbai, the compass is the same. Do what is right, even when it is inconvenient. And I must expand saying that so far safety is concerned, look at the situation, what we do today. Any fatality in any of our plant, the plant head has to come to explain the reason why fatality has happened to the board. Not only this, I think the important piece also is in our compensation system. Not only that, plant head, including the people involved, they get impacted, but the rating of our business director also gets impacted. So I think what we have done by and large is we have institutionalized the system so that some of these things are taken very, very seriously. Looking ahead from compliance to confidence, as we look the future, we believe governance will increasingly be about speed and simplicity. Technology, data analytics, and AI will make monitoring and reporting more efficient, but the challenge will be to keep the human element alive. The next generation of leaders will have far more tools than what we did, but they will face the same test. Can they be trusted when no one is watching? Again, this is a very important piece in my mind. Can they be trusted when no one is watching? While I'll close this and we'll discuss more during question and answer session. Yes, compliance is getting heavier, meetings are getting longer, and forms are multiplying. But that's the surface layer. Beneath is governance, is still about values, culture, and character. Once it is part of your DNA, all the paperwork simply becomes the written proof of who you are. Because in the end, good governance does not begin in a boardroom, it begins in the mind. It is not what we write in our reports, but what we stand in our decisions. Thank you so much. Over to you, Sunil.
Thank you, Sushilji, for very, very enlightening opening remarks. We'll throw some more light on the subject as we move forward. Amarjitji, I'm coming to you for very important question that you have seen governance both from the ICI and boardroom lenses. How do you see the maturity of governance practices evolving among the Indian listed companies over last 2 decades, especially? And also, while the another question related to that is, you have talked about the board diversity, independence, and also accountability. Among the diversity in independence, perfectly fine. And you mentioned certain things about the independence, which we'll also talk. But a more muted question is that what should be, how the accountability is to be measured against the role, responsibility, and the expectation of the independent directors and the other constituents of the governance, such as the auditors and maybe the audit committee and all. So I would request you to kindly throw some light on these aspects.
Sunil, your question is such a long one, and you have covered virtually every aspect of the governance. When you say that how I look at the maturity of the governance in Indian companies, companies also I can divide into public sector and private sector primarily, if you ask me. It is not that the improvement, if at all, has happened, it has happened in private sector or in public sector. I see this maturity level coming in both the sectors, both in the public sector as well as in the private sector, because people have started realizing they have greater responsibilities. I think, without mentioning a particular case, in which even the passports were impounded and bank accounts were freezed of the independent directors. In one of the cases, I'm not naming that particular case in any case. No, naturally, there is a fear psychosis in the independent directors also, that I need to be more focused, I need to give more time, I need to ask more and more of the questions. But if you say that everything has improved, I don't agree with that. The number of frauds, the number of scams in the recent times in terms of the volume are far more than what these were in the earlier years, very frankly, if you ask me. Today, if an account goes down with a bank loan of 5,000 crore, 10,000 crore, even 40,000 crore loans for that matter. If you have a case with the insolvency bankruptcy, where a 46,000 crore loan has been settled for hardly 450 crore, what does it show? I think we are living in a very, very dangerous governance regime from that angle. But I can only tell you one thing. As I told you, the various pillars of the governance, when I talk of the pillars of governance, promoters also, management there, directors there, the auditors there, both internal and statutory, and of course the regulators. Auditors are also living under a greater fear today because of certain reasons. NAFRA has come in. It's not that the IAC was not trying to discipline them, but I think at times ICI didn't have the powers to discipline the firms. Today, the NAFRA has got a power to discipline the firms also. And the kind of penalties which are being imposed by NAFRA on the auditors, it's mind-boggling. I don't think that those kind of penalties, even our CE Act does not provide for those kind of penalties, very frankly. That has been one of the limitations. So there also, the auditors are asking more and more of the questions. But then, is that ease of doing business or not? I don't want to get into that particular part also at the same time. But when pillars of governance start asking questions to themselves and to the others, and I'm absolutely with Sushil on one matter at least, governance cannot come only from regulations, very frankly. You talked of accountability. Now, there is a corporate governance report which is to be given by every company. Sushilji will bear me out that in the corporate governance report, we say audit committee meetings, CSR committee meetings, the board meetings, or risk management committee meetings, remuneration committee meeting, which director attended how many meetings and how much was paid to him. That is not the measure of accountability. Let's be clear about it. And that is not the measure of even what he has contributed. I will like to find out from somebody. He might have attended 8 out of 8 meetings, but whether he opened his mouth at any point of time, whether at any point of time he raised even one valid issue, whether the minutes actually bring out that he raised one good issue which improved the working of the company. To me, that is far more important. To me, his attendance is not important, and I can tell you that there are number of directors who will not open up their mouth in the meetings. There could be directors who may not even read the agenda before they come to the meetings. But the unfortunate part is, or good, or rather, I must say the good part is at least 2 or 3 of the directors are always well read, and they actually take the meeting through, and they are the people who contribute to the governance of the meeting. Any company. But whether that comes out that this person is different from the other person, that never comes out. Because at times the minutes don't indicate who talked what. Today in the virtual world, when I attend a meeting through the virtual, I think it's a much better situation to be in, because everything is being recorded. What did I say? But when I attend it physically, those things don't happen, very frankly. So what I am trying to say is that so far as the accountability is concerned, accountability has to be there in the sense that if at all you fail to challenge a related party transaction, if you fail to challenge the non-implementation of a particular standard, or you fail to challenge as to the change in an accounting policy for that matter, to show a better financial result, I think I am bound to be accountable tomorrow if something goes wrong. If a whistleblower has blown a whistle and people don't care for it, because the whistle has to come to the audit committee chairman in any case, and if he doesn't care for it, then he has to bear the consequences for that matter. So overall, if you ask me, the governance levels are improving, we are transiting, and of course, the diversity has also resulted into better governance to an extent, because when the 2 genders are there in the boardroom, there can be discussion on the many issues, because the other person may have their own thinking process and I may have my own thinking process. When I talk of diversity in the board, it's not only with regard to gender. Someone could be an engineer, someone could be a lawyer, someone could be a bureaucrat, someone could be a lawyer. So any person with a different background is likely to contribute differently to the governance of a particular company. And I think one of the very important roles that few of the independent directors have played in the governance of the company is to insist for a strategy meeting at least once in a year. Not only just hold a meeting for the sake of a meeting. Hold one strategic meeting in which you decide as to what you are going to do over a period of 3 years and how you are going to achieve it. And then assess and reassess every year as to whether you could achieve it or you couldn't achieve it. That's how I look at this situation.
Yeah. So when I mentioned about the measured accountability, of course, what you said is absolutely right, that no one can escape from the responsibility and the accountability. But in practice, we have seen that at times, among the other constituents of the governance, members of our profession, maybe the auditors or the audit committee chair, they are many times, looked from a different lenses as to everything happened or did not happen because of their failure. So, and sometimes the actions are disproportionate to the accountability or the responsibility which one individual owns. What has been your experience? What structural changes you suggest that should be there so that, we have a right fabric of the governance?
I will only say, Sunil, that when we talk of the auditors vis-a-vis the others, pillars of governance, auditor is the person who comes at the end of the tunnel. Let's be very clear about it. Everything has been done and he is at the end of the tunnel. Because if something escapes his attention, then no one is there to catch hold of it. That is the presumption that the society has about the auditing profession, and I think that's the perception that the government also has about the profession. That is why we are more accountable, probably, in the eyes of the government. But if you ask me, who actually gains out of anything which goes wrong? If there is a diversion of funds, who is gaining? It is not the auditor who is gaining out of it. It is the promoter who is gaining. And who is preparing the financial statements? Who is responsible for the preparation of the financial statement? That is the CFO. Who is responsible for declaring whether it is a related party or not? It is the company secretary. Fortunately, unfortunately. Unfortunately, it is only the auditor who is getting the maximum punishment compared to the others. But of late, I think some of the directors have been punished and some of the promoters have also been punished. That I will not say that nothing has happened in respect of the promoters or in respect of the CFOs also. Even in the case of Satyam, CFO did get punished. There is no doubt about it. But I am yet to see a company secretary getting punished. That is something which is very, very, I don't know why. Because company secretary is in the know-how of everything, more than probably even CFO in certain circumstances. But company secretaries are escaping this particular part. And one more part that I forgot to mention earlier, the regulator. As I say, in the case of Inson Bank, why only the CFOs and the other people? Why not the regulator? After all, the regulator had been inspecting the books of accounts for a very long time. Where did any of the inspectors find out all these things earlier? Why only auditors now? Why not those inspectors who had the access to everything? Because auditors may be denied some of the things, but you cannot deny certain things deny certain information to the inspectors of the regulator. But unfortunately, no regulator's personnel has been punished so far, and that is an unfortunate situation to be in. I personally feel regulators should be equally responsible for the implementation of certain things, certain regulations. And if their inspectors fail to detect it, whether it is SEBI or it is RBI or it is MCA for that matter, or any other regulator, even our own institute for that matter. I think in that particular case, we need to be punished also. They also need to be punished. Why not? So that is where I personally feel there has been some kind of a discrimination. Discrimination has been there against the auditors to a very large extent. But in case of the others, I think some punishment has already started. But in the case of the regulators, there has been no punishment so far. And I think it must start at some point of time. Then only the things will improve far more than what these have been otherwise.
Thank you. So, Suti, you have been part of evaluation of governance at the India's foremost diversified business group, Aditya Birla Group, and you have seen the governance disclosures. And while you mentioned that the core remains the same, the purity, the right things, how do you do right things, that remains the same. But then the how do you convey this message of doing right to the diverse stakeholders has changed over the period of time, is evolved rather. And you must be coming across a lot of challenges within your organization while dealing with company CFOs, your management, and bringing together to the convergence where the message which you intend to send to the and the facts which you want to bring before the constituents of the, the diverse stakeholders, how that has changed, and how do you find it in this complex environment as your responsibility?
So, so I think Sunil, Amarjit ji had talked about a lot of things, and maybe the point which you are bringing in, I'm making it very, very simple. I think governance, first of all, as I was kind of saying, that it has to start from your own mind, because unless you are sure of what governance is all about, I think things will not fall in place because regulation or compliance is in a very crude way is more superficial unless you really understand what you want to do from the word governance. I must also say in all fairness that when I joined the group early in 1889, and my governance lessons were fairly early in my life, and I want to quote this just to make sure that listeners they understand how the governance has to be seen, because unless you believe in the regulation will not help, because eventually regulations are just to, and Amarjit ji also kind of mentioned, sometimes someone has done wrong and you create regulation because you think everybody is sure, which is absolutely wrong thing to do, because there would always be some people who don't, they'll continue to do some wrong, and you can't bring just regulation for controlling everyone, and then the regulation actually creates a lot more complexities. So I was talking about when I joined the group, and when I got an opportunity to work with Mr. Aditya Birla himself on early days, and I must say in all fairness, 3-4 days in his office, I was there in front of him. He was talking to his father, Mr. B.K. Birla, and I had some important issues to close with him, which had in my definition was serious implication. They both were kind of negotiating, because B.K. Birla used to run his own independent listed companies, and Mr. Aditya Birla, of course, was running his independent companies. And the company which Mr. B.K. Birla owned was Century those days, and they were supplying some pulp to one of our company, which is Indian Rayon. And to my surprise, they were really hard negotiating. And after a point when the phone was down, I, in my own way, I asked Mr. Birla, I said, what the hell, of course I didn't say what the hell, but in some form I asked this question, at the end of the day, it was within family. Why were you haggling with your father so much? We could have done some more important issues during this period. I remember he going back on his big seat, and he said, Keshil, you are right, but we both were doing our part of job. He's responsible for separate set of shareholder, and I'm responsible for separate set of shareholder. To me, this remains in my mind all the time. Now, I don't think I had understood the word of governance today, that day, but today when I reflect, you couldn't have got a better learning of governance than what I got. And I also remember when Mr. Kumar Mangalam Birla took over, and I think he's the person who wrote first corporate governance report in the country. SEBI actually had asked him to kind of do that in 1999 when he first report corporate governance report, and which is actually called as a corporate governance report, Kumar Mangalam Birla corporate governance report. So I think governance is in the system. That's in our DNA. And that's how it actually kind of translate into the system, and which is where we having to deal with various CFOs or various different countries or various different companies. I don't think we find too much of challenge, although there would be people, and I don't want to kind of completely say that everything is hunky-dory into the system, but largely because the way we operate, and it comes from top. And when I'm saying it comes from top, this example of both Mr. Birla and his father, they negotiating, and I distinctly remember again, Grasim was a company, and our fiber unit, which is a division of Grasim, and another division was cement division, and they were not buying cement from our own cement company. And I had asked Mr. Birla, I said, this is something which is quite crazy. Is a same legal entity, and why are they not buying? He said, okay, maybe they may be having issue with respect to the pricing or maybe service level, quality. There could be various reasons. And he said, I'm not going to intervene. That's their decision. And we ran always a profit center concept. So each one is responsible for their own profit. And hence, these kind of transparency or these kind of arm's length way of behaving actually is the system which we run, Sunil. So I think to me, in our group, some of these things have actually kind of helped, and which actually starts from top. It goes into the system. People like me who have been around for 3.5 decades. We keep educating our community on some of these issues. And as some of you may know, that we run a large asset management company, which is mutual fund. And as a group, we would always have a $3.5-4 billion as a hard cash, which gets deployed into now mutual fund. But we have no risk. We have no commitment, or we have no compulsion for our group companies to invest only in our mutual fund. So our mutual fund is completely independent. They also go and kind of keep crying in front of the treasury officers, because unless they believe that their returns are comparable, the service levels are good, they just don't get money just because it's a part of system. So I think arm's length and if it builds into your culture, I think things becomes easier. That's the way we operate, Sunil.
Yes, Sushilji. So, they say that the Yatha Raja Tatha Praja. So I think what you are saying, in governance, it is always a top-down approach, how the promoters or the owners, they, want to structure, how they want to structure their organization. The people below the line, they follow it. And what examples you are given are really in the right spirit of the governance. Whatever the compliance thereafter we do, but I think these are the basic fabric of the governance which every corporate must have in there. Moving on, Sushilji.
So
Sorry.
before you go there, Sunil, and Amarjit ji also talked about related party transaction. I'm telling you, to me, we also have lots of related party transaction between various group companies. But to me, it never bothers. Because the way our culture works, everyone works on that same profit center approach and all of that. And which is where arm's length pricing, all the transactions are being done at a way where everyone is trying to kind of make sure that their profits are taken care. So I think in our mind, this whole related parties is an easy issue to deal with. And I completely kind of encourage people to kind of start thinking on arm's length approach. The moment if you embedded some of these approach in your system, I think life becomes simpler, because otherwise just putting compliance, just putting a system, just kind of asking a report to be prepared. And he talked about lots of issues around lengthy boards or maybe reports being prepared, quarterly reports. I don't think it's really kind of going to help unless your mindset is where the true governance starts. Sorry, Sunil, you're asking something else.
Oh, you are fine. So the related question, which I thought I'll come a little later, but I think since you have again mentioned RPT, and I like to pose this question to both of you, Amarjit ji and Sushil ji. And that is the one point which always, as the audit committee chair in elsewhere, it bothers me that new disclosure norm suggests that for the arm's length and the fair pricing, the price discovery. Now that's for the audit committee chair, this is something which is and also for the management, it's extremely difficult to present in a right way as to how it's at arm's length price the transaction is happening. Of course, we know in our system that this is the price which is the best price or the at arm's length price, but then to demonstrate that is something it looks like a compliance burden sometimes. So do you think that both Amarjit ji and Sushil ji, Sushil ji, you in your practice, how do you overcome this kind of situation? Because the audit committee would like you to come out with the thesis on how the price discovery has taken place. And Amarjit ji, from the board oversight point of view, how do you ensure that the price discovery which has happened is in a right way?
So you want me to go first,
Yeah,
Amarjit ji?
please, you go first. Yeah.
So I think, Sunil, you are making a very important piece, and I think we all struggle on issues like this. But again, and if you sit back and kind of look at what is being asked, the ask is any related party transaction, has that transaction been done on a fair basis? That's the simple question. Now, if in our, and we all know what is fair or unfair. The problem is, and Amarjit ji also talked about earlier in some reference, he said, who are getting the most? And he kind of extended that comment by saying that promoters are getting the most. I think once we go back and kind of see fairness of the pricing, then we are all home. And that fairness is in our mind, then we can always create lots of valuation report, and we can create all kind of paper trail to justify what we are doing is correct. But I think heart to heart, we know what is fair, and if we can do the right thing, which is where again my mind on governance, Sunil, is it has to be a culture, and if we don't imbibed that culture. And I will again quote a very old example of my own experience. 95 is when I started working with Mr. Kumaran Birla post his father's demise. And again, very early days, I took opinion from a law firm, very big law firm those days. The opinion was talking about a listed company of ours, and it was in a reference to the promoter investment company. And if I remember, the bill was not very large. It was maybe around 10,000 rupees, and I could have easily taken that decision myself, but somewhere I was not sure in my mind, so I had put in a yellow stick paper and sent it to Mr. Birla, saying I need to discuss this. Can I send it to the listed company? But I need to discuss this. And to my surprise, that paper will not come back for many days. One of the Saturdays when we were kind of little at ease, and I was sitting with him, and I was going through my pending list, and I asked him, I want to talk to you about the piece of paper which I had sent you. And he said, yeah, I also wanted to talk to you. What is that opinion you are referring to? And then he asked me a simple question: who got benefited from this opinion? And I pulled that paper back, and I got my answer, because the question he was asking, who got benefited? And I was trying to kind of pass that invoice to listed company, then to investment company, and I took it back, and it came down, and kind of my answer was, I already got that answer in my head. So I think, Sunil, the way I'm kind of describing, not only it has to come from top, people have to genuinely believe what is fair and what is right thing to do. The moment if we understand some of these aspects, then governance is no problem. And then this whole related party transaction, related party things has no challenge at all. So we struggle a lot, but in practicality, if we have to, and I think to me, Sunil, again, I'm also kind of saying, because some of these reports will not help. I think what would help is conversation like this. Someone who has dealt, who is kind of who has got impacted. If we can run through some of these sessions, I think that would be more helpful. Sorry.
Yeah, well said, Sushil. Yeah, Amarjit, please.
Oh, yeah, I think Sushil has answered it so nicely. But sitting on this side of the table, if you ask me as a board member and an audit committee chair, fairness is definitely there. Fairness has to be there in the deal. There's no doubt about it. What one has to actually ensure is that it shouldn't happen as a related party transaction. Because if I have got a huge profit this time and I want to book an expense, so I pass on this expense to someone else. That is unfair, very frankly. There should be a justification. There should be a service being received and service being rendered. Not simply for the purpose of passing on some losses or passing on some profits to somebody. That does not justify the transaction. Now, if a particular company is not doing well and you want to pass on a huge profit margin on certain transaction to some company, that is not fair. Then, as an audit committee chairman, one will only have to ask what is the comparable with a non-related party. And if with the non-related party it is comparable, it's absolutely fine. There's no doubt about it. And if you are charging higher, much higher, you see, I can think of that if your supplies to this particular company are 80% and you are more dependent upon this company, you may be able to have a different pricing system. But that has to be slight one. That cannot be absolutely disproportionate to the price which you charge or which you are being charged by a non-related party. I think that's very important. It happens. Take the case where in one particular building which is being held in the name of one of the related party, you are having different offices now. Now, if you have the different offices there, it is fair that you should part with. You have to pay rent to someone, to the other company to whom these premises belong. And to the extent you are occupying that particular space, what is the fair market rent on that particular date? That has to be paid off. And that there are various ways to find it out, basically. Even the interest in the return on the capital, or after what is the fair rental value. All those things can be done. As an audit committee chairman, when you sit and you look at the various transactions, you will have to have a view with regard to those transactions. And of course, these days, one of the things which may not be very, very fair, but to an extent, probably the audit committee chairman can rely upon that, is to ask one of the much bigger firms to come up and say what are the best practices with regard to these kind of related party transactions. If you want to sell a similar product to a related party, internationally, what is the practice? Because even if you want to sell to a related party, you will not sell it at cost. Let's be very clear about it. You are going to sell it at a profit. But what profit margin you should be charging? And similarly, in the case of the service contracts also, you will not give it at cost, or you will not give it below cost under any circumstances. You have to have a fair margin on that. But what is that fair margin internationally or comparably within the industry? I think those things are available with some of the bigger firms because of their experiences with the various companies, and they can give that. And those reports can be relied upon in certain circumstances. But as audit committee chair, I personally feel it's a very, very onerous task when it comes to the related party transaction these days. Because if you fail to challenge a related party transaction, I think you are not performing your duty as an audit committee chair. And what Sushil has said, what is fair? And when you are dealing with a particular company, when you are dealing with a particular group, believe me, Sunilji, one comes to know whether the promoters act fairly or they don't act fairly. If you feel that they don't act fairly, I think your task is far more onerous in challenging it. When you think of it that they act fairly, in that case, probably it may not happen. And governance always adds value to your share price, to your reputation, to your goodwill, to your sustainability, to your employees. Even retention of employees is greatly dependent upon your governance practices. If you really ask me, retention of customers is greatly dependent upon your governance practices for that matter. All those things do happen.
No, you
Yeah.
are absolutely right, Amarjit ji, because I think and as an audit committee chair, as an independent person, as an independent director, I think life is complicated, And you also kind of made a point that if there are a good governed group, your life is slightly more easier than a group which is unknown to you as a audit committee chair. I think in my mind, as an audit committee chair, also broadly we would have a sense of what is the fair price of a particular transaction, and of course we would like to have more supporting document or third party reference point in case if we have a less knowledge of that of course would help, because there would be some transaction like this somewhere it would have happened, and I think some of those will help as an independent audit committee chair to get a conviction and basis which things becomes easier. So I think more and more I keep thinking on this subject. I keep saying that it's more practice than just putting a regulations around. Sunil.
Well said. Yeah, so absolutely right, Sushilji and Amarjitji on this topic. It's very complex, but then from your I think basic principle of whether it is right, that gives you the sense, the other side.
Yeah.
Sushilji, you are a very large conglomerate having presence across 40 countries, you mentioned. And now a new word which is, always buzzing our ears is ESG. Now, ESG is something which is being looked upon by the investors and diverse stakeholders. Even market also, recognize this fact now. How far this is, in practice, very important. But then, its due importance is being drawn on this point. So, how Aditya Birla Group is, embedding this sustainability, into its governance fabric overall. And you are living to the expectation of the diverse stakeholders.
So I think again, Sunil, and you'll find it. My answers are very straight, simple. I'm not making great English. ESG is what? ESG starts with environmental, social, and governance. Governance we talked about, and I said, okay, this is how we have lived. This is how I've seen the group. So governance, I can go on endlessly. I keep giving you many examples. When we talk of social, I think what I remember is whenever we had to put any factory anywhere in whether it's India or outside India, I think social comes first in our agenda. We would try and kind of put all the related facilities around our plant location to make sure that social is taken care, not only including the employment, but generally well-being of locals. Today, I think each of our location would have schools, hospitals, and various facilities. Now, this is being done for us, at least what I've seen since I've joined, and it's being done in my mind for many decades, because group has now history of over 16 decades. But I think things only have improved. So social is something, again, in my definition, is something which is in our DNA. Chairman's mother, Mrs. Rashmi Birla, she runs the entire CSR facility or CSR activity at a group level, and these are normally being done on a very sustained basis. And when I'm saying sustain, I think we don't do any donation kind of thing. We try and kind of make people more capable so that they can sustain whatever they have to do from a livelihood point of view. So I think just to expand this particular point again, like we would have given someone close to our plant location a sewing machine, and the idea, and we don't donate, we actually loan that Silai machine, and the idea would be that even on a monthly basis, even if you recover 5 rupees a month, the person who has received this facility, they don't feel okay, someone has donated me. They also feel, okay, I have taken something and I have to give it back. So this whole churning keeps happening. And second point also is that we encourage we encourage. If they don't know how to do the swing and all, so we help them understand that particular aspect. So I think our way of social is something which again goes for decades, and we are trying to kind of do whatever we can do in this space. And third piece which you talked about is environmental. Again, environmental is key. And today we have coined this ESG, but I think in our system this was again being done for decades together. We don't want to kind of pollute the environment in a crude way. So we'll try and kind of do multiple things. Today we are in industry which uses chemicals. How do you kind of make sure that where do you discharge? Can you keep the environment healthy? And this is being done constantly. I remember in a couple of our sectors where the water consumption has been dropped at least 70, 80, 90% in various different situations, because the whole idea was if we consume more, we'll discharge more, and that discharge will have some polluted things. So I think these are all constant issues. One has to keep dealing on a regular basis. And again, as I said, it has to be in your DNA.
So, Sushilji, yes, you touched upon ESG, but sustainability predominantly, it talks about the sustainability against the potential risks. Risk could be technological risk, it could be geopolitical risk, it could be, the environmental risk, succession risk.
It could be Trump risk.
It could be Trump risk, So there are multiple risks, and believe me, as we wake up in the morning, we find one more risk added to our agenda. When we go for the board meeting, especially I just see that is there any added risk to the enterprise. So when I talk about the sustainability, all these risks, and predominantly two risks I would highlight here is one is geopolitical risk. You have operation across 40 countries, and you have interdependence across geographies. And the other is the technology. Technology has become extremely, we are vulnerable to technology. And I remember a case, Naira, that, the petroleum company, which is joint venture between the Indian and Russian government, Russian company. Microsoft suddenly one day stopped their operations.
Yeah, one day stopped that.
So everything went haywire. So, and we, in India, I don't think we have any parallel platform whereby we can shift our data and we can have that kind of platform. So, given the complexity of your kind of organization, and believe me, when this news came to me, Naira, I first thought of you as to, how you would, cope up with this kind of situation if something like to happen, how this is going to be, taken care. So as a group CFO, how you are trying to, protect against these risks?
So I think, Sunil, you brings a really, really relevant issue in today's world. Both of these two topics, geopolitical situation and this technological thing, these are real. I don't think anyone can give you a ready-made answer to this. But what we did, we also tracked this development of this refinery, and we were really got concerned. And recently, when we were talking to our head of technology, IT head, and today all our data is actually reside with various cloud companies, which could include Google, Microsoft, and many other. And it has a linkages with the both part which you are saying of technology as well as a geopolitical situation. Now we don't know whether it was driven out of US putting pressure on Russia as well as India, whether that was that was the reason why this was done. I don't know, but yes, that's reality. So what we were talking that how do we reduce our dependence on issues like this, and one of the issue which we have kind of agreed, can we invest in our own cloud and store data on our own cloud, because dependence on maybe any global companies, particularly US companies or Chinese company could be very, very dangerous. And the point I'm making is I don't think there is any ready-made answer. One has to remain alive to the situation and make sure that you are on top of it and you keep taking required action immediately on development like this. That's the way I would respond to this question, Sunil.
So is this the agenda of your boardroom discussion on especially on the
Oh, yeah, of course.
technology part and
Oh, of
the
course.
geopolitical risk?
Of course.
So
of
any
course.
war chest you are trying to build in order to have that sustainability that, the export is stopped in some of the countries because of this tariff issues. There is some technological advancement or, some platform is not supporting you. In that situation, how you as a group going to protect the shareholders' wealth and value?
So Sunil, I think, again, as I'm saying, this is a subject which can again be discussed overnight. And I don't think I want to be giving you a ready-made answer. This has to be seen in a context that one has to only remain live. One has to kind of remain open to what's happening. I think what we do is, and Amarjit ji, in some form, originally initially he made a point that risk committees, and you also possibly talked about. I think each listed companies are supposed to have their own risk committees, and one of the charter of that risk committee in our definition is to deal with existing risk and some of these risks which you talked about, and these are getting discussed all the time, and all the developments kind of are being discussed, and which is where we are on top of what you said when you talked about Niara refinery development. It got discussed at a group level. We are cognizant of what needs to be done. Some action points have already kind of agreed upon, and the risk committee of each respective listed, or even some. And I must also say, in fairness, like we just got into a jewelry business. Now, jewelry business is part of our unlisted setups. That itself is a unlisted company. It's a part of promoter level company, but that company exactly follow all the rules and regulation of a listed company. So they have a risk committee, they have an audit committee, they have everything which is required to be done from a listed company perspective. And the intent from day one was, at some stage we may become listed companies. We have independent directors there, and we just want to make sure that they are comfortable sitting on that board. So I think this is, again, it goes back to the point which I kept saying about the culture, and we kind of imbibed those culture in everything what we do at a group level on all of these subject, which is maybe whether you call it governance, you call it the way sustainable way you have to kind of do businesses, or various issues which we discuss for last hour and a half.
Good. So this is the last question. Thereafter, I'll move to Amarjit ji and then to the audience. The last question to you. As a group CFO, given choice to you, would you like to stick to the quarterly results, or do you find that it helps you track and improve the efficiency and productivity, or it burdens you from various aspects? You can choose to answer, I mean, whatever way you think, but then you may skip also, because maybe
No. So Sunil, I can be very candid, and maybe some of these comments could be my personal comment, may not be used as a Aditya Birla group comment. I think quarterly boards, and anything what you do, you should actually go back and kind of see what's the rationale, why have we done this, why this regulation, why this quarterly results. So in my mind, the way things are being done today in the country, in any case, boards are kind of, board meetings are not easy to kind of do justice to. There is a whole host of compliances. There is a whole host of big agenda paper which gets circulated. I'm not quite sure any human being would be able to kind of do justice to what is being submitted. And Amarjit ji was talking, and he'll talk further on this subject possibly, that as an independent person, it's impossible for anyone, leave apart independent person, even person sitting into the system would find it difficult to kind of do justice. So I think I'm not quite sure what is the real rationale of having quarterly meetings, because it puts a lot of pressure on the system when I'm taking internally, externally, both. And then I don't think we do justice to what is being done, because if you as an auditor every quarter you come and kind of sit on a head, you also want to kind of do some few things as a compliance, and compliance is not the answer. What we would expect from you as an independent audit firm is to help us where there are gaps in our system, and that can only happen if you are not on a routine compliance mode. Because if you are a lot more relaxed, then possibly we'll hear some good input from you. And same way, internally also, the people who are preparing all these long, large board documents, including finance to company secretarial people, or maybe some pieces of law side, I don't think they would be able to justice, because sometimes in a very crude way, I used to ask people, there is a CEO, CFO certificate from various teams. I said, okay, maybe there is a certificate which has been printed, and then every quarter someone goes and they just sign it. I'm not sure is someone really applying their mind. So I think regular compliance is on a quarterly basis may not be relevant, because I'm not still sure what purpose are we achieving. So we need to relook at the rationale of having quarterly board, and it would ease the system, which would actually help better governance, better system, better compliances, and all of that. So possibly maybe I've taken a little longer, but I'm of the view that we should relook at why quarterly boards were being asked to help.
Yeah, what you are saying is right. And at some point of time, I think our regulators need to think as to how to move from compliance to reliance on certain aspects. So that may happen. Thank you, Sushilji. But Amarjit, I'm coming back to you. Sushilji talked about from his large conglomerate point of view, and he is having comfort of hiring many consultants and the people to ensure that the governance framework is rightly taken care. But what about the listed small companies, where these companies may not be able to afford the cost of hiring third-party consultants for various things, or they may not have that kind of infrastructure to support? So what do you think, from a governance standpoint? At the same time, of course, it is important that these companies don't resort to the wrong ways. So you have seen, evolution of the governance in small companies as well. What is your advice and guidance to, the small companies? How do they ensure that the governance is taken care of?
I think Sushilji has talked at length on many aspects. Let me put it simply that in a smaller companies, the complications and governance have also got to be of a different scale. There is no doubt about it. Of course, and there will not be that kind of number of subsidiaries or associates or joint ventures in a smaller company. Layering of the transactions may not be that big a problem as it is in the case of the bigger companies for that. Now, if you ask me, the requirement of the consultants in smaller companies is much lesser compared to the bigger companies as a consequence thereof. So probably the cost could be much lesser, and they can have more competent people within their own staff, and probably they can carry on with it. The internal audit there will play a very, very important role. Whether that internal audit is outsourced or in-house, I leave it to the judgment of anyone else. But I think internal audit is a very, very important source of the information, and probably to improve upon the various processes, the controls, and finding out the weaknesses in the controls and then trying to improve it. So that is the way I will look at it. I personally feel that smaller companies don't require those kind of consultants, which we require in the bigger companies. And accordingly, the cost could be much lower. So far as the governance, and in the smaller companies, if these are not listed, these are unlisted, probably the rigors of the SEBI are not there. But as Sushilji said, some of the good groups, I have also seen that, try to work even in the smaller companies on the same basis as if they are listed entities. They create the audit committees, they create the risk management committees, they create the nomination and remuneration committee, so that if tomorrow they grow, at that particular point of time, they don't face all those kind of problems. And even at the time of the listing, the merchant bankers are far more comfortable with them, on those issues. That is how I would like to answer your question.
Yeah, Amarjit, one more point to you. Do you think this joint audit, which is being discussed, is going to help strengthening the governance going forward?
I think my answer will be considered to be a bit biased, and will be considered as if I'm trying to sell the services of the Indian Chartered Accountants to the corporate world at large. There is no empirical evidence with regard to how the joint audit works and whether the joint audit actually can benefit or not. But if my experience goes in the public sector enterprises, particularly all large-scale public enterprises, there the concept of the joint audit is working out well. There's no doubt about it, if you ask me. And if it works out there well, it can work out somewhere else also well. And my only regret is that when a foreign investor comes into an Indian company, he wants one of the bigger firms to be there. Fine, absolutely no doubt about it. He has a more comfort with those companies. But at that particular point of time, to ensure that there is no conflict, why should he say that one of the big four? And in certain cases, actually, merchant bankers insist at the time of listing that no, you must have one of the big four. Why should it be? I think there are good number of good firms in India also. At least there could be 100 of firms, yeah, if not thousands. I do agree with that. I think whether you talk of Mumbai or you talk of South or you talk of North, there are certain good firms in India also. And it is not that the bigger firms have not been held guilty for certain violations. Even if some smaller firms may be held guilty tomorrow, I will not be surprised, because any person can commit an error. And bigger firms have committed more errors. If you look at the US, you look at the UK, you look at the different jurisdictions for that matter. I don't mind that happening, very frankly, because in audit, if an audit has been conducted 5 times, 6th auditor will still be able to find some kind of a fault in that. There's no doubt about it, because nobody is perfect so far as that part is concerned. Why should it not be that to counterbalance that, there is a smaller firm also, very frankly? And I personally feel that in no profession, the wisdom of the profession should lie in only 5 or 10 firms. It should lie, if at all the profession has to grow, if the country has to grow, if the country's growth has to be met with good professionals, in that particular case, there should be a larger number of firms to be there. And I think joint audit of a smaller firm with a bigger firm will become a ground for even making these firms much better in the working. I do concede one particular point, and I have always maintained it publicly also. The bigger firms taught us one thing: how to maintain good documents. They have actually improved the documentation. They have improved our fee levels, for that matter, if you ask me. There's no doubt about it. But at the same time, it should not become a hurdle for the growth of the local firms also. I will
Yeah.
also like to say one thing, because many people say many things. I may not be seen as a biased person, but some of the Indian firms got into, they became actually part of the networks outside. They could have remained as Indian firms and then grown, and that would have been the real test of those firms. If you became a part of the network of the foreign firms, and then the foreign client, the investors, started insisting that only those firms have to be appointed, I don't think that challenge has been faced by these firms. These firms have grown because of being a part of the bigger network. I think that's very important to be understood. Those
Yeah,
firms were competent enough to grow on their own also, and I must say that. But their growth became exponential only because of the fact, because they became a part of the much bigger network. I have nothing against any of the firms. Let me be very clear about it. I have always said, even as a president, I used to say that I welcome them, and I had called the meeting of the all these bigger firms partners to say that you do some hand holding for the smaller firms, so that these firms also become bigger in the bargain. I will not like to say that I have to cut the size of anyone else to become bigger, but at the same time, I must say that I will not like to be criticized also that our people don't have enough of expertise. We are, so far as the auditing standards are concerned, so far as the accounting standards are concerned, we are as good as anyone else is. That I am very clear about. There is absolutely no doubt in my mind, so far as that part is concerned. So I have been a part of the Corporate Laws Committee of the Government of India, MCA, and we have recommended there, myself and Mr. G. Ramaswamy, we are together there and we recommended that there should be a joint audit. And that was accepted as a recommendation. I don't know whether the government will implement it or not. That's a different matter altogether.
Yeah, so you mentioned that you have a bias too, but I think this is the most popular view today. And when the government is also intending to create more larger Desi firms, it is very rightly. And I think that with the evolution of the joint audit, the governance fabric would further be widened and strengthened. I think that's going to be a step forward towards the better governance and wider governance. One last point to both. Yeah, sorry.
But Sunil, you said the government wants Desi firms to grow. If government wants Desi firms to grow, recent 2 tenders which the government companies floated, these were absolutely biased towards the bigger firms. I think the government must look at that. The government must look at those tenders. That's also very important to be understood.
Yeah, you are right. So these things need to change, and I think it's changing. You know more than me. Things are changing, and it should change, and it should happen. And let's watch that happening. And I'm sure that you have been an ardent believer and very strong supporter of the joint audit. I've been seeing you for last 10, 12 years. You have been arguing in favor of the joint audit, which is now we'll see the light of the day, and it will happen. And the last question to both of you, so today we have a large number of members of our profession, listening to both of you stalwarts. What is your advice to our younger generation in order to be, their role, how do they play their role in strengthening the overall governance fabric of our corporate, world?
Only one sentence. If as auditors and as consultants we can be ethical and we advise what we consider to be fair, not only good for our client, I think it has to be fair to the society, then only we can become partners in the growth of this nation. Otherwise, it will be a rhetoric that we are partners in the nation building. To be partners in the national building, it is very important that we are ourselves ethical And we suggest to the client, we advise the clients what is fair to the society at large, by which the society gains, the government gains, the revenue gains, and not the other way around. That's all I would like to say.
Well said. Sushilji, to what you would say to the younger generation, when they come to your organization or you face them as the auditors or the audit committee or the independent directors, how you what's your message to them? Unmute, Sushilji, please unmute.
Sushilji, you are still on mute. Yeah.
Yeah, so what I was saying that generally my comment would be to keep things simple, because complexity often hides weak understanding. So I normally kind of keep telling youngsters, keep things really simple and focus on core concept and substance over form. I think that to me also is important. Core concept and substance over form. Stay current with the evolving regulation and technologies. You talked about various things, and I think that's one of the things which our youngsters have to keep in mind. Integrity compounds faster than capital. I think people have to understand that integrity actually compounds faster than capital. Never compromise ethics for quarterly gains. If we start understanding some of these things, I think our life will be simpler. Be courageous to voice the inconvenient truth. Your credibility will become your strongest asset. I think a lot of people hamesha question hai, are bole nahi bole. I think in my mind, be courageous to voice inconvenient truth. Your credibility will become your strongest asset. Develop empathy and team building skills. Leadership is about enabling others to succeed. And I would also say, remember, trust can only be 0 or 100. There is no in between. So that's the way I would tell our young professionals, please abide with some of these things. Thank you, Sunil.
Sunil, I would like to say what Sushil said. I have always believed in one thing: leaders create leaders. Leaders don't create followers.
Yeah.
If a leader
right.
creates followers, he is not a leader. Then he is self-centered. If a leader can create future leader, he is the leader in the true sense of it.
Yeah.
Yeah.
Very well said. I think you both have said very, very well, and you have summarized it so well for our younger generations. Durgesh, do we have the question answer session, or we summarize the final outcome, or how do you go about?
I think if some questions are there from the, we have 5 to 10 minutes more, 5 minutes.
No
I think
question.
few questions from the participants we can take. If they wish to, they can type it in the chat box, and accordingly the same can be taken, which you can straight away directly see the chat box, and you can just tell them. So if anybody is
So
there.
I find just one question, because you have given the title. So the one of the audience, they ask as to what is the meaning of advancing corporate governance.
Advancing here would only mean how we propagate and how we take forward this governance.
Forward, yes.
Advancing does not mean advanced governance. No,
Yeah.
I don't think that it was meant that way.
Yeah,
Advancing only meant that how we want to actually take it forward.
Take it forward.
Absolutely. I think so.
Correct.
Yeah. Very, very, very well. Any other questions? I am not seeing in the chat box.
No, there is no question.
So since there's no questions, I would say that we had very, very rich insight from both the stalwarts from our profession. Both have their diverse line of practice, while one is a part of the management, the other one is on the oversight side. From the vantage point of large corporate, Sushilji, and from the regulatory point of and profession point of view, you, Amarjit ji, you have really guided the audience so well. We have some takeaways from this session today. The governance is not a document, it is a discipline. ESG and technology are reshaping expectations, and we'll have to keep responding to these challenges. The profession's role is moving from compliance to conscience. The future belongs to trustworthy, transparent, and responsible organizations. As the Gita reminds us, Karmanyava Adhikarestu Ma Phalesu Kadachan, our duty is to act rightly, regardless of the outcome. And that is the essence of the good governance too. My heartfelt thanks to our esteemed panelists, CA Amarjit Ji Chopra and CA Sushil Agarwal Ji, and also to Durgesh Kabra Ji, the chairman of the committee, and Sharma Ji for sparing their time and navigating this platform for the larger purpose. And thank you, what is his name? Sunidhi.
Sangini.
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 Sangini for connecting us and creating this environment of interacting and bringing out some good piece of knowledge and understanding for our audience. Thank you so much.
Thank you, sir. But I would just like to call upon the chairman, Durgesh sir, for giving his vote of thanks as well to the past president and to Sushil sir.
Thank you, Sangini ji. It's my pleasure to extend our heartfelt gratitude to our distinguished panelist, Amarjit Chopra ji, the past president of the institute, and C.A. Sushil Agarwal ji, who is the group CFO of Aditya Birla Group. In fact, I would like to say that both the persons have dealt the subject very well. Sushil ji has said that it is a mindset, basically. Corporate governance is a mindset. If you have your mindset towards the corporate governance, it will be automatically done. But if you do not have that, then probably the corporate governance will not work. And it is rightly said, yat bhavo tat bhavati. जैसे आपके भाव हैं वैसे ही आप काम करोगे. So it is well said, and he has quoted the examples of Kumar Mangalam ji as well as Aditya Vikram Birla ji, Aditya Vikram Birla ji was the chairman, and Kumar Mangalam ji is the present chairman of the Birla Group. I think that shows that how they are leading the corporate governance in the group and how the other corporate should take it forward to present best themselves, which ultimately helps to work much, much better. As far as our past president sir is concerned, I think he has also covered well that what are the roles and responsibilities of the audit committee, independent directors, and so on and so forth. He has also discussed that when the topic is advancing the corporate governance, then it has to be only good governance. But it is being talked more about the bad governance which is there in the corporate world, which is not right. In fact, when we talk more about good governance, probably other will also follow. But today in the media also, the one fellow does something wrong, that is being highlighted more. एक मछली, बीमार मछली पूरे तालाब को गंदा कर देती है, वैसे ही यहाँ पर भी हो रहा है कि अगर किसी ने कुछ गलत काम कर दिया है, that has been highlighted more, whereas it should have been that the good governance is being highlighted more. I would also like to say that as far as joint audit is concerned, as far as it has been rightly said by Amarjit Chopra sir that yes, when it is working well in the public sector undertakings, well, why it should not work in the private corporate groups? it will work well. But somehow, since the outside investors are there and they are influencing, because of that, the other kind of firms are coming. And in time to come, when the government of India is thinking to have the large Indian firms, probably the joint audit will be one step towards strengthening the Indian firms in this line and in this directions. So it has been well explained. Simultaneously, Sushil ji has also told about the compliance part of quarterly reporting. And as he rightly said, that it is his personal views. But in India, it is quarterly reporting. Likewise, in UK also, it is quarterly reporting. In US also, it is quarterly reporting. But now in US, their SEC has told that instead of quarterly reporting, it should become semi-annual reporting. And UK also, they are thinking of this. In India, probably time will come and may get reduced to half-yearly reporting. Many other things are taking shapes at the Ministry of Corporate Affairs as far as the corporates are concerned. But yes, when the corporate governance will improve, age is suggested by both the panelists. I think automatically the time will come when these kind of compliances will be lesser and better ease of doing business will be there. My thanks to Sunil Goyal also, who is the moderator. He has moderated session well with very wise and wide questions to both the speakers. The questions were mixed of 2-3 things rather than one question straight. So 360-degree view of the corporate governance has been discussed with both the panelists by both the panelists from the point of view of the regulators and independent